Okay, so time frame and top-down analysis is the topic for tonight, all right, and we're going to be taking it in the simplest form possible. The reason why I didn't use these slides for our last class, as you can guess, because we had some Gentiles that joined our call, all right, some uncircumcised Gentiles. So it was important that we keep our secret, all right, so that they don't get to see us finish. You understand? Because see finish is the beginning of disrespect. All right, so tonight we're going to be talking about time frame and top-down analysis. All right, you already know me, you already know my name. So I think there's no need for introductions in that regard. I want to say a big welcome to you guys. Okay, so as a price action trader or as a trader in general, you should never limit yourself to one time frame when trading. All right, it is important to always use different time frames when trading the market, whether as a day trader, as a scalper, or as a swing trader. All right, the concept of multiple time frame analysis is an everyday application. It is a must that you use more than one time frame. Okay, let's go to the objective. The purpose of this study is to help you learn how to use different time frames when analyzing your charts. All right, the reason why we use different time frames and how to get confirmations when using different time frames. Okay, so you also be talking about what to look for when using multi-time frame analysis. Okay, what to look out for when running multiple time frame analysis. Okay, so I want you to imagine when you wake up in the morning, every single day when you wake up in the morning, okay, you have things that you have decided that, okay, these are things that I want to do today. Okay, so that means that you have a 24-hour window. Okay, there's a 24-hour window. However, within the period of that 24-hour window, okay, there's a way you divide the time, all right, those 24 hours, there's a way you split them up such that you've already decided that, okay, these are the things that I have to do by so time, by 9 o'clock, by 10 o'clock. This one, I have to do it within 15 minutes from 12 to 12:15. This one, I have to do it in 1 hour, all right, between 12:30 to 1:30. Okay, so you naturally split up your activities. Okay, you naturally split up your activities that way. All right, at least if you are someone who draws up, plans and projections for the day, a daily schedule and things like that. All right. So when we talk about multi-time frame analysis, that is basically the same thing. Okay, it's like the same way when you started the year, you had goals and aspirations. Some of you felt like, okay, now that I have started Forex this year, by November, I would have bought my first private jet so that by December, I can take that private jet for introduction when I want to get married. You understand? And then by January, I'll just carry money and spray my in-laws and say, go away, just give me your daughter. All right. Some of you had plans like that. Okay. And currently, because this is already October, okay, it already looks like, is this thing still going to be possible? Or maybe I will just go to one of these ASU affected ladies, you understand, and toast them with my normal Corolla, since I don't have the private jet yet. You understand? So are you feeling what I'm feeling? Am I speaking somebody's mind right now?
Yes, you're speaking facts.
Oh, hallelujah. Prophecy. Can I prophesy? You people, you pray prophetic offering after this session. All right, because you're allowing me to use anointing for Forex. But let's go further, all right? So the same way you divided your year, all right, the same way you usually divide months, all right, and weeks and days into smaller activities, all right? It's the same way in the Forex market, all right? It's the same way when it comes to Forex trading, all right, all of the activities in the Forex market can also be divided like that. Okay, the main activity that happens in the Forex market, I'm sure we must be familiar with this already. The activities that happen in the Forex market are divided into two. Okay, we have demand, we have supply. All right, I'm not talking about demand and supply zones. I'm talking about the forces of demand and supply. Okay, and the way the forces of demand and supply start to argue between themselves and drag each other in the mud. All right, that contest, that dragging, that fight, that violence, all right, is what gives birth to ticks. All right, that word is called ticks. Okay, let me quickly write that on the screen. All right, it's called ticks. All right, and a tick is simply a price movement. All right, 1 unit. All right, 1 unit movement of price, or 1 unit price of movement. Anyone you want to put, or anyhow you want to arrange it. You know, the same way if you want to measure distance, all right, you measure it in centimeters and, you know, 100. Let's start from millimeter, all right. When you want to measure distance, all right, normally, okay, we know that we start from millimeters, all right, and then we know that 10 millimeters make 1 centimeter, all right, and then 100 centimeters make 1 meter, all right. We also know that we can use 1,000 centimeters represents 1 kilometer, right? And that was why you heard that guy say, kilometer. Sorry, 1,000 meters make 1 kilometer. All right. That guy, before he sang that song of kilometer, you cannot imagine what his eyes are seeing. Okay. But I will quickly try to tell you the backstory behind that song. They went for, you know, this, when you are dating somebody and you guys are starting to get serious, it's not yet introduction. You are just going to go and meet the person's parents. You understand? So on their way going, something shall happen. Their car had flat tire. So the girl said, well, now that the car has flat tire, let us allow the organizer deal with it so that we can just go to my parents' house. It's not far. So that was what the girl said, though. She said, it is not far. It's just there. Sade, where? She said, don't worry. It's just over there. Before you know it, they trek. It was when that guy now got tired that Yoruba people will say, "O Korea Wubenu." He now started singing kilometer. It's not a normal situation that led to that song, all right? But I believe that now I'll be able to convince you about the origin of that song. So going forward, the same way, all right, what we have initially, the basic units, the same way when we talk about time, all right, the basic unit of time is seconds, all right? The basic unit of distance is about, I think, millimeters, all right? The same way, the basic unit of price movement is ticks, all right? So when we now want to divide it, we can divide those ticks based on time, all right? So what we have as our time frames is simply a breakdown of tick or price movements, a breakdown of ticks or price movements per time, all right, per time, such that we now have 1 minute time frame, which represents all of the movements of price within 1 minute, all right, within 60 seconds. Okay, we also have, 1 hour time frame, which simply tells us that the accumulation, all right, the totality, all right, the boundaries, all right, the frame of price movement, all right, within 1 hour, within 60 minutes, all right, within 3,600 seconds. Okay, so let's quickly go back to the slides. As a price action trader, your primary time frame is the 1 hour, the 4 hours, and the daily. Now, this is not an absolute. but you know, now waiting then give me be this. So now waiting I go read for now be this before we now go into the one that me I know to explain. All right. Your primary time frame, and that's why it's called primary. All right. There are secondary time frames that you can still adopt. All right, that you can still work with. All right, to work better. Okay, so the primary time frame is the hour, the 4 hours, and the daily. All right, and price action works best on larger time frames. Okay, I think I said this during the last session. The higher the time frame, okay, the more power, the weightier its decision is. Why? Because the higher the time frame is telling us it it contains so much more price information, so much more price data. All right, and as a result, we know that based on that, it's like trying to compare somebody who has 30 years experience in the banking sector and another person that just has 2 years experience working as a bank teller at the front desk. All right, you already know that their decisions, if they both take a decision regarding the company, or if they are both deliberating about what decision is best for the company to take, it's most likely that that person that has had 30 years experience will be able to provide a more meaningful suggestion or a more meaningful advice. All right, all things being equal. So price action works best on larger time frames, because if you try to trade candlestick patterns, all right, the pin bars, the engulfing bars on the 5 minutes time frame, you are most likely going to lose your money. And the reason why is because there is a lot of noise. Mark that word, noise, on smaller time frame. What is noise? Noise is an unwanted sound. All right, noise is unwanted sound. Okay, so that's why, let me give you an example. Okay, I don't think you need an example. So noise is, unwanted sound, all right? And there's a lot of it on the smaller time frames. Why? Because there are a lot of fake movements, fake outs, manipulations on the lower time frame. Okay, but the higher the time frame, the more difficult it becomes to manipulate price, all right? The higher the time frame goes. So because there's a lot of noise on smaller time frames, and the market will generate lots of false signals because of the tough battle between the bears and the bulls. Okay. Besides, there is no successful price action trader who focuses on just one time frame when analyzing their charts. All right. So in case you've heard of the term top-down analysis, it simply means starting from the bigger time frames to get the bigger picture, like I explained in last week's class. All right, I think that after this session, I'm going to also have to drop the video to last week's class. All right, so please remind me. I think the safest way to do that would be to put it on my YouTube channel, all right, and drop the link so that, everybody can have access to it, and I don't have to spend so much data sending the videos privately to each person. Okay, so you use the larger time frames to get the bigger picture, and then you switch to the smaller time frames so that it can help you decide where exactly, the exact spot, all right, you're going to be starting your buy or sell trades from. So say, for example, you want to trade on the 4 hours chart. You have to look at the weekly charts first, okay? The weekly, the daily, and then you go to the 4 hours, okay? And the reason why is because if the weekly and the daily charts analysis align with what you're seeing on your 4 hours, then your trading decision is valid, right? Your trading direction is valid. And if you're looking at trading on the 1 hour time frame, you have to look at the daily chart and the 4 hours chart first. This is a crucial step as a price action trader because it will help you avoid low probability trading setups. All right, what is a low probability trading setup? A low probability trading setup is a Bobrisky in the financial market. All right, that's what we call a low probability trading setup. It looks like a lady, all right, tries to talk like a lady. But by the time that it is only the two of you in the bedroom, you realize that she is not a she, she's a he. Do you understand what I'm trying to say? All right. So you see people like Princess of Africa, all right, and Big Bob, they are examples of what we refer to as low probability trading setups. Because by the time you invest your money on them, they disappoint you, they disappoint your heart, they break your, in fact, they do so much damage. All right. So in order to avoid low probability trading setups, you want to avoid trades that look like a buy but are actually a sell, or trades that look like a sell but are actually a buy in disguise. You understand? You understand? So let's go on. So through our top-down analysis, we're always going to start with the bigger time frames and then look to gather further information from the lower time frames. The most important support and resistance levels, which serve as our turning points, like we've talked about in previous classes, all right? These levels are mostly drawn from the higher time frames, okay? When you want to do your support and resistance, all right, it's important to do those or to do that on the higher time frames, okay? So if somebody is being blessed right now during this class, can you drop an emoji in the chat box? Let me know that you're hearing me and you're following me closely enough. Oh, thank you, Silhouette. I've not heard your voice today. Don't worry. Before we end the class, I will make sure that all you these ladies with very sweet, sweet voice, you will talk this night. Eniola and Silhouette, you must talk this night. Yes, it's a new month. You've not wished me happy new month. I will collect my happy new month with voice. All right. Mr. Charles Emmanuel, I believe that now it's becoming simpler gradually. Your head is no longer overloaded, right? Good. All right. So some of the things that we're going to be talking about when we talk about top-down analysis. All right. Some of the things that we're going to be talking about when we talk about top-down analysis is the first one we saw. All right. The support and resistance levels. Okay. Then the next one is the market structure. Okay. The weekly analysis will help you identify if the market is trending up or down, or whether it is ranging, all right, or a choppy market. In general, you will know what the big investors are doing. You will know what moves they are preparing for, okay? And you will be able to find a way to follow them on the smaller time frame using the price action strategies that you will be taught or that you have also been taught already. Okay, the next thing is you want to look at the previous candle, all right? If the last candle on the weekly chart, now this is under the assumption that you're trying to trade on the 4 hours time frame, all right? You're looking for trades on the 4 hours time frame, and that's why we're talking about the weekly time frame. That's why we're talking more about the weekly time frame, okay? So when you've checked the market structure on the weekly time frame, the next thing you want to check is the previous candle. All right, what was the last candle on the weekly time frame? The last candle on the weekly time frame is important because it tells us what happened during the week, all right, the previous week. It provides us with valuable information about what the future market move will most likely be. Okay, so let me give you an example. Say you checked on the weekly time frame, all right, and the market structure is bearish. It means that right there, you're already assuming or you're already expecting a sell entry, right? However, the previous candle, you find out that the previous candle on the weekly time frame closed as a pin bar, all right? Closed as a pin bar on your support level. All right, closed as a pin bar on your support level. Now, my question to you is, are you still going to be looking for a sell entry or for sell entries? Let me know in the chat box quickly. On the weekly time frame, structure is bearish, all right, but now we have seen a weekly pin bar that has closed, all right? The weekly pin bar has closed on top of a support. on top of a support on the weekly time frame. So are you still expecting the market to sell or buy? What's your bias? Everybody type it in the chat box. Let me see that. Oh my God, my people are doing well. Hi, I feel like giving you people suya as giveaway this night, but unfortunately, distance is a barrier. I would have sent some of you suya this night. But in case you want to take the suya giveaway, just do
send it
su. Yeah. Don't worry. If you do that 3 times and you don't get suya, sue me. Sue me in the next class. All right, you are free. If you do suya, yeah, and you don't eat and you don't taste suya.
Yeah.
No, now, Mr. Charles, you are spoiled it.
Still on
Mr. Charles, no, wait, Mr. Emmanuel.
that.
The reason why it is not going to work right now is because you are doing it while you are connected to the internet. So all the suya that is supposed to come is going to be sending through the internet to somebody else. See now, as you are saying it, suya is appearing here. It's you that you are the one that has wasted your suya. You are doing it, suya is appearing here. So it's best to do it in the night before you go to bed. You understand?
Yeah,
adventure, they will bring it in your sleep. You hear?
Yes, sir.
But please stop wasting it. Suya is scarce. Now that they want to ban for more self, suya is scarce. Don't waste it, please. See, and you're loud. You don't know that month just started. You want me to do October the way September did me? Please, please, don't worry. We'll talk to doctor. We might be having a giveaway soon. I'll talk to doctor about that. You guys are doing well, actually. So we'll talk to doctor about that. So make it an October to remember. Hey, Sakpa no, they remember anything, my sister. Let me just do my day. I will not form pride that will not last. All right. Before we start doing GoFundMe, we come for class like this. I'll drop GoFundMe link. Please, so don't let's do it like that. All right, so that's a beautiful one. So the candlestick can also indicate that we're expecting a reversal already. Okay, then another thing is, what is the market condition? What's the market doing on the 4 hours time frame? So this is where you now go to the 4 hours time frame. All right, on the 4 hours time frame, what kind of trend do we have? Is it a trending market, a ranging market, or a choppy market? We already know that if it is a ranging market, what we are simply waiting for is a breakout. All right, a breakout and a retest. If it is a choppy market, we already know that it is no longer any of our business. We just stay away. All right, and if it is a trending market, we can easily just follow market structure, use our supply and demand for entry. All right, supply and demand zones for our entry. Okay, we're still going to look at all of these things. When you watch the video that we did last week, all right, a lot of these things will make more sense. All right, a lot of the things that I'm saying now will make a lot more sense when you watch those videos. Okay, by the way, who else feels like the new batch of people that just joined the PREMASTERY? Who else feels like they are noisemakers? Who else?
They are more than noisemakers.
They are noisemakers as well.
Because this night alone, I have had more than 130 notifications from our.
I couldn't even read the messages. I couldn't read the messages.
The class.
I'm in pains right now because even as we're having the class, notifications are still dropping.
Yes, sir. Yes, sir. Exactly.
Don't worry. We know what we will do today. You watch and see how we handle them. Watch and see. They are lower time frame people. We higher time frame will show them. All right. Don't rush.
Yes, sir.
Don't rush. We know what we will do. Okay. Ask the family. We will handle it. All right. So the next thing is, now that you have observed the support and resistance on the weekly time frame, that you muted the group. So what if I now tag you on the group? How will you know? Don't do like that too. Don't do like that too. Don't worry, we'll deal with them. We'll lock the group after a while. Now I'll lock them. They'll not talk anything again. So we've checked the support and resistance on the higher time frame, the weekly time frame, the daily time frame. All right. You've checked the market structure. and then you've checked how the previous candle has already closed, okay? And then you've checked on the lower time frame, you're already seeing that the market is already trending, all right? It's really, really trending already. The next thing you want to now do is you want to mark out the important levels, all right, the key levels, the same way you did on the weekly time frame, all right? You want to do the same thing on either the daily or the 4 hours time frame, all right? And that could be either a support and resistance level or supply and demand zones, all right, or trend lines. Remember, we've looked at all of these things in detail in the past, all right? Supply and demand, support and resistance, trend lines, okay? So after you have done all of this, okay, it will give you areas to focus your attention on, such that as soon as price gets there, okay, the last thing that you now do is you wait for a price action signal. What do we mean by waiting for a price action signal? You are looking for a candlestick pattern that provides you with a signal either to buy or sell the market. This could be a pin bar, an engulfing bar, an inside bar, whatever it is, okay? So we're going to look at an example in the illustration below. Okay, so can you see this is the weekly time frame? All right, this is the weekly time frame. We have seen that this is a pivot zone or a turning point. Why is it a turning point? The answer is simple. You can see that over here. All right, you can see that over here, it acted as a support. Over here, it acted as a resistance. Here also as a resistance. Here also as a resistance. Okay, so now that price has come back to this level, okay, we need to know what are we going to be expecting from here. So buying from this point is very wrong right now. Why is it wrong? Because this is a proven turning point and we are on the weekly time frame. Before we know whether to buy or sell, all right, the next thing we want to do is we want to go to the lower time frame. All right, so we have gathered 2 important points that will help us decide what to do on the daily time frame. The first point is that the market has approached and got into an important weekly resistance level that will represent a hot point in the market. The second information is the rejection from the key resistance level. As you can see, price was rejected immediately it approached the level. All right. This confirms or indicates that there are sellers that are willing to short the market. Okay, so what confirms our analysis is the formation of the inside bar false breakout pattern that indicates a reversal. Let's go back to the weekly and see that. Can you see that inside bar? All right, we got to a resistance level or a turning point on the weekly, and now we are getting an inside bar. So let's look at what the daily time frame is showing us. So on the daily time frame, this is that weekly level that you saw, all right? On the daily time frame, we're seeing bullish candle, all right? That is indicating a buy signal. We're seeing bullish candlestick indicating a buy signal. Now, at this point, several people will be preparing to buy already, okay? On the daily chart, we have a clear pin bar candlestick pattern that indicates a bullish signal. If you focus on just one time frame to make your trading decision, you would have bought. And you would have bought because you are seeing the clear pin bar signal. But if you have checked from the weekly chart, you would know that you are already at a powerful key level, and that level is going to stop the market from going up. So it is better to think of selling the market when you get a clear signal rather than buying from that point. Okay, so let's look at what happened on the daily time frame. So can you see on the daily time frame, this was that pin bar. We had just one buy candle, all right, one bullish candle, and afterwards, can you see the weekly level took over, all right? The Jagaban on the weekly time frame took over, was shouting. Now that the daily time frame has finished its own, a Nilokan, and as you can see, price lule. You can all see that All right. So as you can see, the top-down analysis works. And it's because of the top-down analysis that the candlestick signal, that pin bar that we saw on the daily time frame, it was because of that weekly resistance that signal didn't work. All right. So we highly recommend that you stop trading based on just one time frame. All right, because you may end up losing your entire account. Trading against the trend is very profitable, but you cannot do it without top-down analysis. All right. Whether it is trading the trend or trading against the trend, you cannot be a successful trader if you focus on just one time frame. All right. Let's look at another example. We can see this is the weekly time frame. All right. And this is a proven turning point on the weekly time frame. All right. And then we see that price got there. Can you see the price is now at a level where it is highly anticipated a reversal will occur? How do we know? Because it has proven a major reversal point in the market. All right. If we look at the past, and can you see the previous candle? All right. Can you see the way the market closed at the previous candle? Which is a very interesting one. All right. So what happened next? We had a strong bearish candle that followed. Okay. So as you can see in the chart above, price was at a weekly resistance level. Buyers were rejected twice from this level before, which indicates that the market is at a halt point and it is likely to reverse. Remember, I said that the third test is usually a very powerful one. Okay, the third time price tests a support or resistance. What you can do as a price action trader is to switch to the daily time frame and start looking for selling opportunity. If you can find a price action setup near the weekly resistance level on the daily time frame, it is going to be a high probability setup to consider. So let's look at the daily time frame. This was the weekly reversal level, all right? And then we can see that there's a bearish reversal candlestick signal that has closed here already. So what do? That becomes our confirmation for a sell. But we will still have to go to the 4 hours time frame to confirm that. The daily chart above confirms our weekly analysis. The pin bar was rejected from that weekly resistance level. And there's also the formation of an inside bar false breakout. All right, so let's see what happened next. On the daily time frame, can you see what happened next? All right, after that candle, price simply came back to retest that level and then did what? A huge major reversal. Can you see that? If you are taking this trade on your account, you would have been swimming in big money. Okay, so what happened next? This reversal. Okay, so now that you have seen all of these things, okay, we're going to show you practical step by step, but it's going to be very brief. All right, because I'm still going to send you a video that will explain all of these things. Okay, so let's start to look at these things more practically, all right, from a very good point of view. Let's use Euro USD. All right, so this is Euro USD. Let's go to the weekly time frame. You can see that I have also had levels that I marked. So let's go to the weekly time frame. Let me hide all of this. On the weekly time frame, we're simply looking for our key levels, right? So let's do that quickly. All right, we're simply looking for our key levels. And what do you see? Let me quickly mark another level. I think this is also, yes. I think that's a better level. We can see it has been tested here, 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 here. All right, price has broken it, and now we're seeing the retest here. All right, price broke it clearly, and then we are seeing the retest here. So let's mark that area. And go to the daily time frame. Okay, this meeting is about to end, so please join the link again. All right, join the link again almost immediately. I'll restart the meeting almost immediately.